For a VC, who's kind of looking at deals and helping with deals every day, what are the top three things that you look for in a startup when you're considering whether or not to invest?
That said, generalizing always, I mean, we're early stage, so it's a lot about the people, about that. So team first. You have to get to know the team, understand, are they going to persevere through, all the challenges that that building a startup is, and are they going to give up? So you have to, so number one is the team. Um, Number two, I would say we focused a lot on the problem. So we love founders or startup ideas where you're really solving a painful problem. So we, as investors in my fund from Tech Ventures, we don't do a lot of consumer. We don't do a lot of sort of gaming, for example, because it's more about emotions. It's about some, it's more about art. We love the science part of things, meaning that you're solving a real difficult problem that companies are willing to pay for. So we actually really try to understand the problem and why you want to solve this problem. And I call it, I mean, this is not a new term, but sort of like a founder market fit. Are you really just going to solve this problem? Like the first attempt at it might fail, but are you going to just keep on iterating or pivoting until you find a solution? So that's super important. Then the third part is sort of around the market or the size of the market or the opportunity. And it's sometimes really hard to say, but like we have to understand, is this a venture scale business? I would say the most startups that I reject, and I have a lot of great entrepreneurs, people with great ideas come to me, and it sucks always saying no to those people, because it's just, you can build multiple different types of businesses. You could build lifestyle businesses. You could build operational business. You could build a small business, big business. But is it a venture scale business? Because our model is built on a power law. We're trying to find the outliers. And if we don't think you have the potential to build a globally leading company in your chosen space that has potentially a venture scale outcome, even if we love what you're building, it's not a fit for us. So, categorizing, this into three things, I would say these three things, like the founders, the problem, and is the opportunity VC scale.
Passion for what they're building, if it's all they're talking about, passion cannot be faked or replicated. It's pretty easy to tell when someone is super passionate about something. And that's one of the most important things. Two, like obviously a past record of success. Like if you look at their LinkedIn and the math Olympiad or I had internship at X and X, like these are signals that is for high achieving people. And three, just hunger. Like try to get to know them on a human level. What is their backstory? Why are they doing what they're doing? Like for me, my story is we went through it at the start. Like that is my why. Try to figure out people's why. But also like don't try to sniff out who's like cracked or who's not cracked. Like just have a normal conversation. And if you want to determine if they're cracked or not, like through the normal conversation, you should be able to decipher and then maybe do your own like diligence on the background. But really it's like you're just meeting someone to get to know them and try to build a relationship there. Maybe if you're trying to decipher, like, is this person worth my time? Sure. But I'd be open to give a chance anyway.
It's hard to pick favorites. So perhaps I'll highlight one from NEA and one from Zeal. One from NEA that I want to highlight is actually a company that started out as an incubation and later turned into a really impactful growth investment in a company called Curana Health. Curana Health is a value-based primary care provider for senior living communities and residents for adults that live in these senior living communities, like skilled nursing facilities and assisted living communities. So we started this company in 2020, 2021. We funded it in 2021. And today it is impacting just really, really helping residents across 1,000 senior living communities in over 25 states. And so that one is one that was able to, one, scale quite quickly and has just a incredible management team. But the thesis of it came through NEA. We researched the senior housing market. We talked to a lot of different operators. We talked to different folks in value-based care to build that clinical model. We brought in the management team to help grow it. We helped with early acquisitions. And so it really felt like both a little bit of building actually at the earlier stages and growth investing in one. And so that one is one. And then the second one I'd want to highlight is a exciting company out of our Zeal healthcare portfolio. This is a company called 7 Starling. And so they are a maternal mental health platform. They offer therapy and medication management and an in-app digital health app for moms from fertility all the way through postpartum. And as you may know, 1 in 5 moms will encounter some type of mental health condition during their motherhood journey, but over 70% aren't able to get the help that they need, either due to it taking weeks to get matched to an in-network provider, or honestly, just not having the time. Having a new baby, it's a really tough journey, and it has been stigmatized in the past. And so 7 Starling partners with over 1,000 OB-GYNs and is in network with most major commercial providers and now Medicaid as well in 15 states. And it's just grown tremendously in both its impact and its scale. When we first invested, they were in 5 states and they've tripled that to 15. They are now also serving moms on Medicaid because of the impact that they've made, their growth and scaling in a short amount of time. We invested in them just last year alongside Pear VC and Emerson Collective and Foreground Capital, Magnify Ventures. So really excited about that one as well. Yeah, so those are a few in the healthcare space. And then maybe I'll touch on one in the fintech space. At ZL, it's called Debbie. Debbie is a rewards platform that rewards positive financial behaviors. So think about it almost as a reverse credit card. For a credit card, you get rewarded for spending. But as you may know, many folks are actually still paying off massive debt, right? And trying to get their financial profile back on track. And so Debbie actually rewards things like savings and paying off debt. It partners with credit unions and banks and financial institutions. And it's a B2B2C company where it's actually attracted new millennial and Gen Z users to financial institutions, bringing in new sources of revenue and deposits, right? As they get people to reactivate dormant savings accounts or start new savings accounts, pay off their debts, and ultimately build their FICO scores, their credit scores, their profiles to become more valuable customers for these FIs while also improving their financial health. So that one is also female led by 2 co-founders in New York City, actually. So that one is one that is really exciting and one that I'm closely working with too.
Because we're so early stage at the pre-seed seed, I'd say it really depends. But overall, I think it's a lot more qualitative at the stage that we're in. And I think the biggest thing for us right now is, at least for me, it's like I look at a problem they're solving and I want to understand really, what is the pain point they're solving for the specific person or ICP they're targeting. And so I really want to understand, okay, like based on the problem that you're trying to solve, what is the solution? And then from that, extrapolate to why are you and the founding team the best people to build this business, right? And so we're always looking at founders that are thinking big, right? And what I say by that is like, we want these companies or these potential founders to think about this as a billion-dollar business. If you're thinking of like, oh, I just want to do $5 million and that's it, like we really want to back the dreamers, the people that want to scale very large. And so a lot of the times, I think a lot of these founders are maybe thinking of more of a bootstrap business versus going fully venture scalable and being as huge as possible. And so like we always like to understand kind of why the founder is doing things, what's their purpose. Is it because they felt the pain point before and their background before that they've gone on to build something? And so to answer your question, like they're couple of things that come into that, right? It's like founder market fit. Are you someone that is able to articulate why you're the best person to build this into a $1 billion potential business? Another thing as well that we look at specifically is like, unfortunately, a lot of it is like, is this market big enough for us, right? And so what I mean by that is like, as a fund, we have to evaluate this on an outcome basis. We need to understand is like, based on how many people there are that would buy this, based on how much you're charging, is the market as we see today, or if we extrapolated 5 to 10 years, do we believe it has what it takes to have the revenue that we think will lead to a certain preferable outcome through exit or an acquisition? So we also want to understand that as well. And I think just generally to wrap things all together, it's like really understanding, is that founder able to articulate why they need the money, right? Because a lot of people will come and want to raise venture dollars, but then are also unsure of what they're going to use it for. And so I think it's really important coming to a venture pitch at the earlier stages, like, okay, well, I need $1 million in pre-seed. I believe that we're going to need 800K for go-to-market. What does that actually mean? Is that you're hiring sales, or you're hiring customer success, or you're using that for ads? So I think what we look at as well is like a clear reason of ask, because sometimes people might be raising prematurely that they actually don't really need that money now. They can bootstrap all the way until like it's like a need money or die situation. Then they'll go and raise VC dollars, right? And so we always encourage founders to kind of think of like the purpose of the capital being needed. Do they need it now? Could they raise later so they don't over dilute themselves early on? Or, could they bootstrap and get recurring revenue without VC dollars, and then prove enough traction or initial signs of product market fit before coming to us to raise VC dollar, right? So these are kind of a couple of things that we kind of look at this stage to make sure that we're vetting, the best founders.
I think as a generalist and someone who invested the pre-seed and seed, again, this is very situation dependent, and we aren't a fund that has a hard and fast, you must have X amount in revenue. We'll even go pre-revenue. So I do think it is very qualitative as opposed to quantitative. But for us, I'd say the top 3 things we look for when we're valuing a startup are the team, the market, and their traction. And team is much more heavily weighted than the other 2. For us, as we're investing so early, we know your technology may pivot and change several times before you even reach the next stage or before you reach an exit outcome down the line. So we want to make sure we're investing in a team that can weather that storm and has the differentiated ability, founder market fit, technical know-how or industry expertise, or maybe it's a network and Rolodex of people in the industry they can sell to. So something that really differentiates the founders and gives them an edge over potential competitors. And then in terms of the market, it needs to be a big enough market. There's plenty of incredible founders I've met where they have a company that they've started that may give them a very successful outcome. Maybe they become a millionaire from it, but it's not VC backable since it's too small of a market. And those can be more of a lifestyle business, something that just doesn't have those potential for outsized unicorn level returns. And for us, we really only want to invest in those companies that do have that really large market they're targeting. And then the traction. So for us, we do go pre-revenue at the pre-seed phase. However, we do want to see some sort of customer validation, whether it's strong design partnerships, several unpaid pilots. If it's a digital health company, for example, maybe they're in a hospital's accelerator program with strong buying indicators. So it isn't a hard and fast rule. And I'd say the traction is almost the less important factor at the pre-seed stage. Of course, it becomes more important once you hit seed stage. You will look more into their revenue, have customer conversations, all of that. But I'd say at the very early pre-seed, where most founders are starting out, it's really the team that's the number one thing we look at. And that team can be differentiated in a bunch of different ways too. We want certain qualities we look for in founders. We look for founders that are high resilience, since when you're starting a company, you're going to get kicked many times and have all these obstacles you have to overcome. We look for founders with high integrity as well. We want visibility, transparency. We want a founder that is cooperative and going to work with us. But again, there's no one size fits all. I'd say we have successful founders who have all different types of personalities, but the team is the one constant. That's our number one focus when making our decision.
When it comes to looking for, who are the founders I look for, I look for someone with grit, someone who has shown the ability to go after something and go after it with passion and with full focus. They got to be someone who's works from a purposeful mission. They have to have a purpose. And the best founders, when you look at and you peel back the layers, you'll find that there's something much deeper that's driving them. And that only comes out when you build that relationship with that founder, understanding where they came from, where they're at today and where they intend on going. This helps in really picking out those people that you can entrust with your investors' money. So I would say that grit and integrity. What was their previous experiences, or their previous companies they've launched? What was their relationship with their investors? What was their relationship with their customers? And that kind of, you can pick those things out, right, through conversations and building that relationship. So the grit, of course, integrity, and the will. And I think these three come together to build that culture, right? If you look at any startup, they got to have the product, yes. They have to have the right, they have to be able to attract customers, attract talent, and those two will attract investors. So when you look at what attracts customers, well, a great product, right? What attracts talent? A great culture, right? If the founder doesn't have, like I said, the grit, integrity, the passion, the will, then they won't attract the talent to support the customers and the vision they have.
The single most important aspect is definitely the founders, right? I mean, we come in pre-seed mostly, sometimes also seed. So that's the one thing that really matters. Like, how great are these kind of founders? Are they a real outlier team or not? And it's sometimes really tough to say. Like, this is where we have long conversations and long assessments of these kind of founder profiles. But it's just the most important thing. Like, obviously, then you also look for the product and you look for the market. You don't look for the product market fit yet. I think that comes rather later. This is what kind of Series A investors invest in. But we still obviously look for the product in terms of, is it a fit with our thesis? Is this something that is actually useful? And we always conduct like reference calls with our experts. Is this something that is hot and needed and will also get some follow-on funding? And then you obviously also do some commercial due diligence. You look at the market. Is the market big enough to build a proper VC case in there? And then normally what we look for, what's really important, is the kind of intersection between founders and the market. We also call this founder market fit. So you look at loan standing at these two, and then you put them together and ask yourself the question, how likely is it that these kind of founders will build something massive in this kind of market? And you look at the fit between the two in terms of, do these founders fit the market? Do they bring the right experience and the right kind of attitude and capabilities to win in this market? Sometimes you could even go further and say it's not about the founder market fit, but about the founder problem fit, because maybe the market will actually change. But especially in healthcare, where things are maybe a bit more difficult compared to other verticals, and things can sometimes take a bit longer compared to other industries, where you need a deep connection to the market, or even better, the problem, to be mission driven, to be passionate, and really have the grit to persevere and build on it in the long run.